I was like, there has to be more innovation somewhere in the ecosystem.
Right.
Grain silos being converted can't be the future. I think I was pretty bearish on Europe most of my career until the last 3 to 4 years. And it's very clear that Europe has a huge part of the energy transition and climate story. We thought the executives, the entrepreneurs deserve somebody to scale with them.
Right. Was there ever a moment after you founded Energize that you sort of doubted that you'd made the right decision? Hello and welcome to Readcasts, a podcast series sponsored by Read Partners, featuring founders and thought leaders in the private markets industry. I'm your host, Scott Church, a senior partner and co-founder at Read, and I am so happy to be able to welcome our first guest for our inaugural Readcast series, John Tuff. John's co-founder and managing partner of Energize Capital. How are you doing today, John?
I'm great. I'm excited to be the first one for this and see where we can take it.
We really appreciate it.
Yeah.
Maybe a quick bio before we get into your career journey. John oversees all aspects of the Energize business as a member of the IC and on boards of several investee companies. His career spans over 20 years across finance, investing, and operational roles. He's been focused on the ongoing integration of new technologies into the critical infrastructure and resource industries. Prior to Energize, John was an early employee of Choose Energy, ultimately scaling that business into one of the largest online energy marketplaces in North America as Chief Revenue Officer. He then managed a successful sale of Choose to Red Ventures. Before that, John was an investor at Kleiner Perkins, an obscure venture shop you may have heard of, where he focused on investments in the intersection of technology and energy. John started his career in investment banking with UBS in Chicago. He's a Duke undergrad, we'll forgive him that, and got his MBA at Chicago Booth. John, welcome to the show.
Thank you.
I thought maybe a good place to start for our listeners is just to describe Energy Capital a bit, the business and what you're doing there. Sure.
So Energize Capital is a firm focused at the intersection of software and services and the energy landscape. The name is Energize, so energy is a big part, but we also think that within the climate theme, there's other industries like industrials, agriculture, built environment where we focus. In general, we see that there's a mega trend occurring with the digitization of our more traditional industries, and we want to be the specialists that serve those markets. So we've established a firm, and I can give more of the history shortly, that looks to capitalize with financial capital, thought capital, strategic capital, the best stars of the space.
Got it. Super interesting. And maybe then just in the background of building up to this part of your career, why don't you walk us through a little bit of your career journey, if you will, that brought you to the vision of founding Energize?
Yes. So I began my career here in Chicago, which is where we're having this today, at UBS Investment Bank. I was a biology and chemistry undergrad. And how does biochem undergrad show up at UBS Investment Bank in their industrials group? And the answer is the Midwest was the first wave of clean tech 1.0. The first wave here in the States was bioethanols and those types of fuels that were being converted from old grain silos into production plants for E85 gasoline. And so the banks were coming to Duke University to look for kids who understood biology, who could write S1s and take them public. And so I came to the Midwest, never having a connection here, spent a few years learning the heavy depths of finance, and had a tremendous experience, but quickly realized that wasn't the future of the energy transition, of the climate movement. And I was like, there has to be more innovation somewhere in the ecosystem.
Right.
Grain silos being converted can't be the future. And so after I decided to go to business school to learn more of that traditional finance, and quickly in that experience, I applied to and got a job at Kleiner Perkins, which you mentioned. I had been dreaming about going to the West Coast, of being around the innovation cycle, and this was back in 2010, so this is early.
Yeah.
And so I said yes midway through my first year and went out there and started working, and I've been in this space ever since.
Awesome. And how did your experience with kind of climate 1.0 inform your vision for Energize?
Yes. So by seeing the hardware cycle of that more clean tech 1.0, and then by going to the West Coast, I saw just how nuanced and different the climate industries are. Energy, industrials, these are critical infrastructure industries.
Yeah.
They think differently. They think about risk differently. You need to understand them as a customer to better serve, to understand how to sell them software and digital tools. And so the lessons I learned were just that. This space is different. It requires specialty. It requires expertise to know how to serve and grow these companies. And I also learned that there are some amazing tools that the more digital and traditional venture capital growth equity firms in the West Coast have used to grow. And so I wanted that experience of both, clean tech, climate tech investor, but also, really understanding the technology landscape out West.
Got it. And I suppose your role as an operator at Choose also informed this whole venture,
right?
Energize.
Yes. So Kleiner Perkins is an amazing firm. It's one of the most important firms of the technology landscape. It's also extremely humbling for a younger investor. Every entrepreneur that comes through the door was generally coming for the logo behind me,
right?
Not to talk to John, and despite how ambitious I was, and I quickly realized what they wanted was a sparring partner. They wanted somebody who had been an operator, who had been in their seat to really go through the nuances and the doldrums of running a business, the highs and the lows. So after a few years at Kleiner, I helped lead an investment into a firm called Choose Energy, an online energy marketplace. Joined as the second employee.
Yeah.
And wore every hat in the organization over the course of 6 years, including chief revenue officer. I learned tremendous respect for an entrepreneur. I learned tremendous respect for the capital markets and having to raise funds, and ultimately about how to sell a business successfully. And I used that experience to then think about, what do I want to do next? And I said, I'll never start a company again. Well, then I started Energize. So here we are.
Was there ever a moment after you founded Energize that you sort of doubted that you'd made the right decision?
The belief of Energize is that the climate entrepreneur and executive deserves a specialist. Like, at our core, it's that there are firms, every industry, healthcare, finance markets, there are investors that have served those domains. And so I really always had conviction that this climate space deserved a specialist. Now, did I doubt it? Of course. The highs of entrepreneurship are so high and the lows are so low, as you know, also from your experience. And there are moments when you just wonder, it's a very cyclical industry. It has regulatory influences. And even me, who has that experience, can question, man, this is pretty hard.
Yeah. Well, I suppose the other challenge in building a firm like Energize is you're shaping a culture, right? And a mindset. Maybe talk about what your North Star is in those areas.
Yes. The most important part of a investment firm is the decisions we make. We don't make a product that is, you can make a facility or anything like that. Our decisions are the product. And so I go back to, there are so many different stakeholders involved to making a decision at an investment firm. You have your internal team.
Yeah.
You have the executives or entrepreneurs you invest in. You have the limited partners. And so really early on, I made a framework for our team. We called it our ethos and our order of operations, which is defining who's the most important in that stack. And for us, it is team, entrepreneurs, LPs.
Yeah.
So for the LPs out there, I'm sorry, but you're last in the stack. The way it works is, if we take care of our team, we build a great culture. We build a great culture of respect. We'll find great entrepreneurs and we'll support them. Entrepreneurs, if they perform, ultimately it's their job to deliver returns to us and our LPs. And so it's a very natural stack. And where I've seen investment firms in my career have missteps, it's when they've mixed up that order. And so we are extremely laser focused on team first culture, respect, and trying to incorporate what we say is quality is contagious. So every level of the organization has to be top tier.
And are there things from your past experience when you came into building Energize that you knew you absolutely wanted to change without disparaging any of your prior stops?
No, I think it's a great way to frame the question, which is being different is not better or worse. When we have CEOs come and change leadership at some of our companies, which is a natural movement when companies scale, I always tell them, you can go make a change. And you don't need to disparage the prior because being different is not better or worse. It's different. It's what works for you. And so when we launched Energize, just to be clear, we are based in Chicago.
Yeah.
People said to start an investment firm, you need to be in New York or you need to be in the West Coast. To be focused on climate, you need to have ties to Silicon Valley and be part of the university ecosystem there. It was really important for me to say, let's take away all the priors. Let's assume that we're going to build a world-class firm patiently over 20, 30, 40 years. What are the most important things? And for us, what I kept or what I decided not to keep were some of those fake requirements that others had shared, like location, et cetera. And then we've really focused on building a team from within now. So that's another one. People said, go hire 10 senior people.
Yeah.
Well, if you know our team, we have grown together. It's been the exact same leadership team for almost 9 years. We are growing together. We'll be together for another 9 to 20 years. And that's the really important part for me.
In building that team, was there a key hire or hires that were really transformational in your efforts to do that?
Yes.
Get it off the ground?
Yes. There's a fun story within our firm. So we have two co-head structures. We have two, maybe going back, we have two strategies at Energize Capital.
Right.
We have a venture capital strategy focused on emerging startups, kind of Series B, Series C startups. No technology risk, but commercialization and scaling.
Right.
That strategy today is co-head by Tyler Lancaster and Juan Muldoon. And we love the co-head structure because Tyler came from industry, came from energy. He knew the customer really well. And then Juan came from traditional investing. And they get to be natural counterparts and lead a team together. And so Tyler, Juan joined when I joined. So like fabric from the start. We had to convince Tyler to come over.
Right.
We were like a 3-person shop and he was making a career decision. So that was a big one. But then in our co-head structure for Endurance, and just to give a summary on Endurance,
yes.
Endurance is a more mature profile of climate investing and energy transition investing. We focus on profitable control investments for climate companies. So think 30, 40, 50 million of revenue, EBITDA positive. A different investment profile. But we wanted to keep the fabric of the team structure, so we have a co-head entity there. Kevin Stevens comes with more energy background. Alan Glass, who's the pivotal hire, which this is the long answer for, just joined us from Vista Equity Partners and is a fantastic execution-focused investor to pair with Kevin.
Right.
So there are these big moments that we've made in our history to really invest in the team, and we think it starts with leadership.
Sure. Makes sense. So it's not completely organic, but that's kind of
correct. Most
default.
of the team has built their career here at Energize.
Yeah. When choosing the strategy and the nuances, you've explained some of it across the venture and the later stage investment strategy. How much of that is what you really enjoyed and have passion about and experience in versus what your read of the market was? They really need this.
Yes.
And they're not getting it elsewhere.
Yes. Fantastic question. When we started Energize, the market was pretty nascent for climate companies. To say that there was a profitable climate company back in 2016, 2017 they were few and far between. So when we launched the firm, it was, the first strategy was ventures because that was the state of the technology landscape. And we started investing in 2017 and there were great companies we could support.
Right.
And that conviction that I learned from the West Coast, which is be a great support to the executive team, deliver an experience from your operations background, and it can be very valuable. The beauty of our firm is that most of us were operators in a prior life, and so we just inherently early on created a vision. And so far back as 2018, we did have a vision that we would grow with the market.
Yeah.
And when the climate market matured for the energy transition, for the industrial technology landscape, we would mature with it as an investor because we thought the executives, the entrepreneurs deserve somebody to scale with them.
Right. So in a way, you have stayed ahead of the market, and it's kind of you're following the market opportunity, or the market's coming towards you. What would you say?
It would be hard to say we could push the market ourselves.
Yeah.
I think it's really important to know timing. Being early is being wrong in many ways. You don't want to overinvest resources. You don't want to be early to a movement. And so for us, we have this really proprietary database where over the last almost 10 years now, we've sourced over 1,000 companies per year.
Wow.
And so we've been able to identify all the key metrics of maturity, of scale, revenue, profitability, growth rates, customer health. We have this huge back-end system at our firm called Edge, which captures all that data and it's told us
Yeah.
when to lean in.
Okay.
It said, hey, there's maturity, there's scale and profit emerging now.
Right.
And so once we started seeing more of those data points, we started to create the second strategy, which is endurance.
Maybe looking a bit ahead, what opportunities are getting you excited now?
So firstly, it does still feel like, I won't say the first inning, but it feels like maybe the start of the second, to use a baseball reference. The first movement of the energy transition was all about getting certain technologies down the cost curve: solar, wind, batteries, industrial landscape sensors. They all got really cheap. And so now we can deploy those assets at scale.
Right.
Energize, we focus on software and services, capital-light business models. Those businesses are best at helping enable scale. They're not best at helping lower the cost curve of a hardware unit.
Right.
And so what we're most excited about now is, now that everything's pretty cheap, the new technologies are as cheap as incumbency. It's all about how big can these industries get. And just when it was already exciting enough, the AI wave happened. Right. Suddenly Google became a climate company. Microsoft, if you're a hyperscaler, you're long energy. If you're a hyperscaler, you're long construction and materials. You have to be sustainable. So the landscape of budget for the companies that we focus on just exploded.
Sure.
So that's most exciting.
Would you say is the thing that's changing the fastest right now? Is it kind of AI driven?
I would say that it's the quickest emergence of budget that we've seen in our firm's history.
Yeah.
So that a company that, if, for example, if you were in the energy transition, you were selling software to help a utility manage their grid. It was the utility, maybe an energy developer as a customer. Right. Now you have a whole landscape of the developers for data centers and the people trying to do resilience. And so it's extremely exciting, and it's metrics oriented because like profit and scale is happening in climate. And for so long, those were just not consistent.
What surprises have you had, either recently or further back?
Yeah, so I'd say I'd put this internal as like a firm manager and external. Internally, and this is a positive surprise, we put out a job posting for a senior associate role here, and over 1,000 people applied.
Wow.
I think the reason I got a job at Kleiner Perkins in 2016 is because I was the only one that applied. I think that just the maturity space and how talent wants to come to the space is amazing.
Right.
And that's not just us, that's the portfolio, that's the investment landscape.
Sure.
All of these avenues are really, really positive. A positive to the industry and to our portfolio has been scale. So our first vintage, the 2018 vintage, we were underwriting, get to 30, 40, 50 million of revenue, and we'll sell this business.
Right.
Those businesses are cruising through 100 million of revenue.
Yeah.
And so when you get an underwriting wrong to the positive, it just tells you that there's change. It also tells you to stick with it. And so the negative surprise recently has been, it's a cyclical industry.
Yeah.
And their policy can come out and kind of scare the market. The beauty is, if you're a specialist, which again, we want to be, we know how to navigate those cycles and know how to get ahead of them. It's meant that a lot of the generalist investors who were in our space and doing some later stage investing have all left.
Right.
I don't want to be too proud of this, but they left at the wrong time. Because of all these trends, there's these amazing revenue profiles that are scaling, these amazing entrepreneurs, and valuations are actually fair for us relative to the AI theme.
Yeah.
So we're pretty excited about the market today, but just have to be aware that it's a cyclical space, and this is where the capital light strategy really pays off. You can ride the highs and lows in a more capital light strategy.
Right. I guess, and the cyclicality is probably the biggest risk. Are there other risks that keep you up at night?
Certainly. The energy movement, the climate movement is global. So in addition to local policies, there's international fun, the tariffs, for example, or trade dynamics that have emerged. It is harder for some climate businesses to scale across border for those reasons. And just staying up to speed in all the different nuances that could affect a business, in addition to the basics like managing a team, like culture, like product market fit, like pricing strategy. Like all these things are hard enough, and climate makes it just a little bit harder sometimes.
Right. And I suppose, are there disruptors, potential disruptors that maybe the venture gives you a window on?
Yes.
Coming up?
Yeah. So at Energize, we like to say that we're better together because of both strategies.
Right.
And so our venture strategy, even if we're investing at Series B stage, which is 5 to 10 million of revenue, they're meeting everybody from 2-person teams. And so we get to see what innovation looks like, what disruption looks like. It also gets to tell us where people aren't focusing sometimes, and where like moats have been built around product or distribution at a later stage. And so we definitely use that intelligence to inform our endurance strategy. There's more protection. But in general, this is a global movement. We have a huge pipeline of companies. And it would shock you the level of innovation that is starting to come to this market.
I bet. I want to pivot a little bit now.
Sure.
I mean, your business is super exciting, and we could talk about that all day. I want to talk a little bit about leadership, and I think our audience is interested in career learnings and leadership. Maybe what's inspired, or who's inspired you in terms of industry leaders that you've been impressed with, or that you've tried to model your leadership on?
Sure. So the beauty of Energize is that we're across a few strategies. And so over my career, I've been able to pinpoint firms I respect, groups I respect. On the venture side, I really respect a firm called Rivet Capital. Rivet. Yep. They're focused on the financial services space, fintech. And Mickey Malta, who's the founder there, whenever he speaks, I've got to meet him. So if you have a connection, let me know. But whenever he speaks to you, you can just tell that he understands the role of a specialist. And I think that's important at the venture stage. And they've become a firm that has carved out their value there. At the buyout stage and the kind of more growth buyout stage, this is going to be a little basic, but it's hard to not admire what Blackstone has built.
Yeah.
Despite you can be critical of the generalist approach, but they've built specialty within a generalist approach as a firm, and they've delivered scale. And I think the climate market needs that partner at scale, which I'm excited to hopefully sell our business to. Yeah. And then the third one is. Our space is very tied to infrastructure in some ways.
Yeah.
The software we sell is going on an asset somewhere, and there are tremendous infrastructure investors that have emerged over the last few decades. And one out of Canada, La Caisse, formerly CDPQ, who's a great partner of ours. You see how they see the future, and you can get growth and value out of infrastructure, and that's a very unique approach. So I admired all of those as firms. And then I admire what you've built at Reed.
Oh, thank you. I guess as a leader, one of the challenges we all have is you can't be everywhere all at once.
Right.
How do you think about your time allocation, John?
This is where the team is everything. Like I mentioned, our decisions are our product. And so you have to know when to delegate. You have to know that you have a team you can trust. Fortunately, at Energize, the leadership has been together for almost a decade.
Yeah, it's amazing.
And kind of we have the ambitions of, like I mentioned before, going for another few decades. And so that trust you can't kind of overlook. I would say, I generally think of it in a matrix of, is this decision critical? And if we get it right or wrong, can we recover it? And if it's critical and you get it right, that's great. But so many decisions are not that important, even if you get them wrong. And so then it's about speed. And in this world, there's not that many moats in finance. And so one of the few, I think, is research, and we can talk about that. But if I can delegate a decision and we can correct later if it's not the right decision, I'd rather encourage speed as long as we avoid the one that's critical and wrong.
Right. That makes sense. And I guess decision-making being so critical, but such a critical part of the business, not everybody's comfortable speaking truth to power. How do you make sure you're getting the right advice and the right information to make the best decisions you can?
Yes. Throughout my early finance career, I was fortunate to have a lot of great mentors, and I learned the power of frameworks. And I think when you give a team a framework, it can be a positive crutch because it forces groups to respond without too much bias.
Right.
And so, for example, at each of our strategies, ventures and endurance, we have a framework to evaluate each company. For ventures, there's 6 criteria, including impact, which we have to speak to. And the beauty there is we ask everybody in the team to fill it out in some capacity on a deal. And to your point, maybe a junior resource isn't comfortable coming to talk to me.
Right.
But if they are forced to put something on paper, it's a good way of saying everybody's equal in this discussion if you put your thoughts on paper.
I like that. That's excellent.
So we have those frameworks that have become very helpful for us.
Great. Maybe switching to career learnings. How we're all dealing in complex environments with probably too much information that we have to filter through. How do you better understand a situation that you're confronted with? What sort of either frameworks or processes do you put in place to be able to make these decisions?
Yeah. The beauty of this job is that it surprises me every day. And we are trying to grow a meaningful, finance firm here. And there are surprises across the team, across the portfolio, across the LP base. Because of our growing scale, I've been very fortunate to meet, executives in our portfolio, LPs who have access to. And my type A person usually says, oh, let's solve this problem. And like I jump right to my desk with a pen and paper. And that's like the most unproductive few minutes. And then I'll step up and I'll go see our COO, Katie McLean, who's a pillar of our firm. And she'll say, John, call XYZ, call Paul on this topic. And so I think that one of the best ways to handle uncertainty is to build a network around you for people to call when the uncertain moment emerges. This isn't rocket science. There are smart people in our networks who want us to succeed, which is nice. And knowing who to call is actually the most important part of that decision.
Yeah, excellent. And let me ask you, what would you give as advice to the 21-year-old John Tuff, given your experience and hindsight benefit today?
So firstly, I would have said, go to Chicago and do bioethanol and biofuels. And but beyond that, I'd say, only a few decisions matter in a career.
Yeah.
That really can put you on the right trajectory. And I think choosing the market that we chose, which is a big, massive market, climate, energy, industrials, it wasn't vogue for a good part of my career. The social, local, mobile of the technology trend was all the rage. I lived in the Bay Area.
Right.
It felt very hard to stick with it. And so if I would have seen myself, I would have said, pick that market. It's a big one. And just be comfortable being different. Be comfortable staying with it when it's not the cool thing to do anymore. Climate isn't the cool thing it was even a few years ago. And again, I love that. Like, to me, that's when alpha is made. That's when team conviction is earned.
Right.
When portfolios surprise you to the upside. And so just kind of the persistence is really important.
I like that a lot. Okay. Now a little fun for our audience to get to know you a little bit more personally, John.
Okay.
I'm going to do rapid fire questions.
This is new. I like it.
And you can just give me the immediate answer.
Sure.
If it's really difficult, I'll let you have a few passes.
Okay. No, I want it.
Okay. Ready?
Yeah.
Favorite movie of all time?
Great question. I have 3, I have to say.
Okay.
Number 1, Top Gun.
Yes.
My eldest son is named Maverick. So yeah. Number 2 is Gladiator.
Yes.
My middle son is named Maximus for the lead there. And then
wait, I can't wait for 3. I got to come up with a child's name as well.
No, my daughter didn't get the same.
Okay.
And number 3 is actually more. I have this one Bruce Springsteen concert that I probably watch on TV like every other week, and I've probably watched the London concert 250 times in my life.
Fantastic.
And it's just a great way to decompress. So
love it. Okay, you answered one of my other questions already. Then, how about book or film that most change your understanding or perspective on a subject?
Yeah, there's a lot there, but the one that jumps out is it's easy to look back at companies and say, of course they were successful, and you don't understand the meandering perspective they took. Shoe Dog by the Phil Knight story is one that just like I absolutely love, because you see it how many different ways it could have died along the path.
Incredible.
And just like he was obsessed with the idea, but that's only so much. You have to be persistent. And so I just loved like knowing the grit that goes into that type of execution.
That's a good one. Okay. Cubs or Sox fan?
So I'm a Cubs fan, adopted Cubs fan. My wife is from Chicago, so we moved to Chicago. I love my sons are now Cubs fans.
Okay. Dog or cat person?
Dog. Like, I wish I could have like 10 dogs.
I figured. I could have guessed that one. Smooth or chunky peanut butter?
Smooth.
Okay. What's your guilty pleasure, John?
Guilty pleasure. Beyond the late night Springsteen, because they can go pretty late. I would say that this isn't be corny. So I'm Coach Tough on the weekends.
Coach Tough.
I'm Coach Tough.
You're a tough coach.
I'm a tough coach. I have been teaching soccer to my kids for the last like 6 or 7 years now straight. And if you've seen the movie by Will Ferrell, Kicking and Screaming, where the coach is just a little too intense.
Yes. Is that you?
Me. That's me.
Is that you? Okay.
So occasionally I'll step back. Like, it's just they're just like 6 or 7 years old.
Right. Okay.
But I do love just like getting out there and be on the field with kids.
Love it. Okay. So your guilty pleasure is overly intense coaching.
Yes. Yes.
What was your last impulse purchase?
Oh my goodness. My last impulse purchase was probably a couple new pairs of Air Jordans.
Okay.
You don't need them. You never need another pair, but then
That's
the color
true.
combination is pretty good.
What's been the most consequential relationship of your life?
Oh man, this is like a dangerous one. You give perspective too. I have to give the double answer. So number one, the thing I told 21-year-old John as well is marry Jane when she comes in your life shortly. So my wife, 3 kids, has moved with me everywhere. Like it's so important to have that pillar at home, especially with all the travel that this job requires, and kind of unquestionable support. That's number one. And number two is I have a twin brother, Doug, who's in New York City. We're twins, but we're almost different in every way after that, including a look. In that he's been in New York City for his whole career. He's like an accountant and has taken very little risk, where I occasionally try to lean into risk.
Right.
But the same thing is he's a family guy, and so he's very important consigliere for me on important decisions.
That's great. Something you've recently changed your mind about?
Ooh. Even with the AI hype, I've been a pretty consistent AI skeptic at our firm.
Wow.
In that there's hype cycles, and this feels a little bit like the telecom and broadband hype cycle of the 2000s. But in the concept of customers can prove you wrong, we've started to see several businesses that are bucking the trend where the customer purchase is persistent. It's not from an innovation division, it's from a real GM. And so that's probably been the biggest one most recently. And then number two, I'm going to add a second one here too. I think I was pretty bearish on Europe most of my career until the last 3 to 4 years. And it's very clear that Europe has a huge part of the energy transition and climate story. Where the highs are high in the US and the lows are low, the Europe is like just compounding positive like part of the climate story. And I think we as a firm will continue to do more there.
Well, we're with you there.
Yes.
How about, what are you streaming right now?
My kids are obsessed with the ninja thing. And the Ultimate Ninja.
Ultimate Ninja.
And it is pretty wild what these humans can accomplish. It makes me feel like I'm not doing enough at my desk job.
And do you do that binge or episodic?
It's been pretty binge recently.
Yeah.
So that's the one.
What car make and model are you personified?
Okay, who do I want to be, or who do people tell me I am? So I drive a Jeep Wrangler.
Okay.
And I love the car, and I think I kind of want to be like cool and like free like a Jeep, but I'm definitely not. And so who do I wish? Who do people claim to be? It's probably I don't know, like a BMW X5.
Okay.
Like good utility, but like still
Pretty stylish.
But again, like really want to be that Jeep.
Right.
Top off.
Okay.
Hair flowing.
I'm with you. What's the last thing that made you laugh out loud?
Other than the chunky or
Chunky
smooth peanut butter.
Yeah.
I got home from a trip early this morning, and I walked in the door, and my daughter ran to me and said, "Daddy, where have you been my whole life?" And I said, "Where did you hear that?" And it must have been from a show that she had watched on Cinderella or something like that. But it would just made me burst out laughing because, again, kids they're so funny.
They are. What about your pet peeve?
Effort.
Lack of
effort. If this is one of the things that Energize, quality is contagious. If you're not giving your hardest, and other people are, you're doing a disservice to your team. So it's like effort.
That's a good one. Just a few more. This is fun. What do people most get wrong about you?
I can come across as serious. Sometimes I don't smile enough. I've been told that. So, but at our firm, we really try to have that balance of work life. I think it is really important to build a firm forever. If you want to have a multi-generational firm. But so it's the seriousness. Okay. I do try to take myself too seriously.
Okay. Okay. With a name like Tough, you must have had a childhood nickname.
Oh yeah.
Your favorite childhood nickname?
So I have a twin brother. So the Tough Brothers was just great because you could walk into any place, and we moved every 3 or 4 years for my dad's job across the globe. And knowing I could walk into a new school with the Tough Brother moniker, nobody picked on you. Moved to London, England, nobody picked on me. Moved from London to Dallas, could have been easy fodder. The Tough Brothers. That was
Tough
good.
Brothers. Mm-hmm. Okay. And did you have an unwanted childhood nickname?
I'm not sure I'd repeat it on this.
Oh, okay. Fair enough. I said I'd give you a pass.
Yes.
Your favorite place in Chicago?
Wrigley Field. Wrigley Field on a summer day is the happiest place.
It is.
Chicago.
I totally agree.
Yep.
3 people. This is the last one, people. 3 people from any era you'd like to invite to a dinner party, if you could.
Oh, it's really good. It's really good. Okay. Any era?
Any era. Any walk of life. Any geography.
All right. Number 1 would be Bruce in the 70s or 80s.
Of course.
Yep. Just bring that guy to the table and like have a good time.
Yeah.
Number 2 would be, I've admired my father forever. He's still like a big part of my life. I mean, I would love to have known him when he was like my age now, just like bring that to like the table and just like understand how he was like, he was a great father. I have 3 other siblings. So that'd be one. And then I'm going to cheat a little bit. I want to meet me in 30 years.
Ah.
And like what advice would 30 years from now, John, give to present day?
Yeah. I like that.
And hopefully it's more of the same.
That's great.
Yeah.
Thank you, John. You've been a fabulous guest.
Thank you for having me.
Your time.
These are great questions.
Good.
Just to be clear, that was the surprise.
I know. Yes, it's true.
It was good.
I flung it on him. Okay. And that's a wrap.
Readcast. Disclaimer. The information discussed in this podcast is for general information purposes only and does not constitute financial advice, investment recommendation, invitation or inducement to engage in investment activity, or an offer to buy or sell any financial product. The views expressed are those of the speakers as at the time of the recording and do not necessarily reflect those of Reed Partners or the firm employing the guest speaker or any of their respective affiliates. The information discussed, including any forward-looking statements, should not be relied upon for any purpose, and listeners should seek independent professional advice before making any investment decisions. References to specific companies or products are for illustrative purposes only and do not constitute an endorsement or recommendation. None of the content should be copied, distributed, or reproduced. Past performance, where indicated, is not a guarantee or reliable indicator of future results. Any references to past performance, track records, or investment returns are for illustrative purposes only. Actual results may differ materially from any projections, estimates, or implied performance discussed. Reed Partners is engaged by its clients to market their funds, and the firm employing the guest and/or its affiliates is or has been a client of Reed. In the US, Reed Partners operates through its wholly owned subsidiary, Reed Partners Americas, LLC, which is a registered broker-dealer with the Securities and Exchange Commission and a member of the Financial Industry Regulatory Authority. Reed is not a current advisory client or fund investor of its client funds, although its partners and employees themselves invest in client funds via a pooled vehicle established for such purpose, which may have negotiated beneficial economic terms in connection therewith, e.g. reduced or no management fees and/or carried interest. For providing its services, Reed is entitled to cash compensation paid by the client, rather than the client fund. Reed has a significant economic incentive to solicit investors to commit capital to their clients' funds, resulting in a material conflict of interest on its part. No compensation has been received by Reed Partners in connection with the guest's participation in this recording, and the views discussed herein do not constitute an endorsement or testimonial of guest, its employer, or its private funds. The information contained in the podcast is believed to be accurate as of the date of publication and will not be updated or supplemented to reflect subsequent events.